Good afternoon. Today's Market Mondays here with Denny Troncoso, CoastalLoans.com. I'm going to get right to it. We have a new program from one of our lenders called United Wholesale Mortgage. The program is called No Down Payment Required Upfront. So I'm going to go ahead and share my screen so you can see the flyer, and then we'll go over the bullet points. Of course, we're going to go over some information on something recently happened and then finish off with interest rates. Now, the right now, what you should be able to see my screen. There we go. So, no down payment required. Zero down purchase program up front. Get into your dream home now. Keep cash in your hand for expenses. Fast closing, usually on average 20 days. It's pretty fast. And no longer answer to a landlord. So if you're renting and you've been wanting to pull the trigger, this is something that can really help you to get into the home purchase program. And then it's not going to cost you anything up front. I'm going to explain why. So this is how the program works. It's a new program from United Wholesale Mortgage, just rolled out last week. And really there may be something similar around there, but this is very unique from a lender. And then it's really open for everyone as long as you meet some of the requirements. So the first one is it's a 0% down purchase loan. So guess what? You do have to, whenever you buy a house, one of the things you have to put money down. Well, what this is, it's call it a silent loan that goes as a second on your loan. But the cool thing about it, so you're going to receive basically 3% down payment assistance on the home and up to $15,000. And it's a second lien that doesn't require any payment or any interest until you refinance or sale. So guess what? Let's say you find a house and you qualify for this program. The house is $300,000. It's 3% down. So I mean, if we're doing the math right, you'll get about $9,000 to put down. And then it just stays as a silent second $9,000, right? So you don't have to put any money out of your pocket. You would pay the closing costs. That would be your responsibility. Maybe you can get a seller credit. Boop. So that way you can less money out of your pocket even. And then let's say 5 years from now, 10 years from now, whenever you decide you want to refinance or you want to sell the house, then at that point, that money would need to be paid. So you wouldn't have to, so you're basically getting a loan for free, and then it's going to help you get equity. Hopefully within these 5 years, 10 years, you paid down the loan, the house appreciated in value, you made 25, 50, 100,000, and now you pay that loan off, and then you go on buy another house, or maybe you refinance into a lower rate. So super cool program. Now, what are the requirements? You have to have a FICO score, a credit score that's at least 620. That's like the middle score. So if you're looking at the three bureaus, that your middle score is around that 620 or higher. And that is if your income is below 80% of the area median. And there's some calculators around there from HUD, typically the Housing Urban Development Department, that they have charts all over the country for the area median income, and then you have to be below the 80% mark. Now, if you make enough money to be over 80%, you can qualify too, which is cool. You just have to have a FICO score that's over 700. And you must be a first-time home buyer. So you can't be selling a home to then buy another home and then use the program. Definition of a first-time home buyer is you can't have owned a home within the last 3 years. So that's just the definition. So if you owned a home 5 years ago and you haven't owned anything since then you can buy something. There are certain restrictions, of course, fine print. We have to go through the process and see if you can qualify, but I can definitely help you do that. So reach out to me and we'll go from there. I'm really excited about this program. I think it's going to help a lot of people to get a home before interest rates go down and home prices go up, right? Because interest rates hopefully are going to be going down by the end of this year if inflation gets under control. We'll see how that turns out, but I believe that's the path that it's going on. All right, so next item, recent customers did not qualify because of over debt to income back-end ratio. So yes, I was working with a customer recently, And man, I was excited to help them become a homeowner, do a loan for them, and they didn't qualify because the debt to income ratio was too high for them. So what is that? The debt to income ratio, and particularly the back end, how does this all work? Well, there's some limits on it that depending on the loan program that you use, is you have some limits on how much debt and income that you are paying. For VA, Veterans Affairs loans, or USDA, if you're buying in a rural area, because you want to get 100% financing, it's 41%. If you're buying conventional, you can go up to 45%. And FHA, you could even go up to 55%. Now, guys, the lower the better because you can get better rates and you don't want to fall into something when you have a lot of debt, right? So the lower the better. But we can get you into a home with a maximum of 55% debt to income ratio on the FHA. Now, how does it all work? Let's do the math. So I put an example here. Let's say you're making 10,000 a month and your monthly debts are 1,000 a month, and you're going to buy a house and your monthly mortgage payment, which is principal, is called PITI. It's principal, interest, tax, and insurance. And then if it has an HOA, so you would all include all that. And then in this example, I put $1,500. It depends, right? Where you're buying, the price, etc. So let's say if the total is $2,500 between these two, the 1,000 and the 1,500, you have 2,500 total. So you divide the 2,500 divided by your income. So it's 10,000, 2,500 divided by 10,000, and you get 25% debt to income, all right? 25% debt to income. Now, this is perfect. You would qualify for all of these programs, right? Now, if your debts are 6,000 and your income is 10,000, then your debt to income is 60%, and there you wouldn't qualify. All right, now you wouldn't qualify now, but we can get on the path. So that's what I'm doing with this customer. And because I was a personal financial advisor before, I can help with the whole debts and the budgeting and creating a plan so we can become a homeowner, because that's the way to build wealth, right? And I mentioned that in another video. That's one of the number one ways to build wealth. Now, the roadmap is you can either increase your income, maybe if you get a higher paying job, go back to school, take a trade, etc., get a raise, or you can decrease your debt payments. So realistically, decreasing your debt, it's a faster route to do this, right? Now, how would we do that? We would create a plan to pay off debts that maybe you have a monthly payment, but you have some cash. Let's pay it off, right? And then let's go ahead and eliminate those cards, right? Side note, don't typically want to recommend having too many cards, right? Because then that can cause problems. Let's focus on a maximum of 2 credit cards, right? And I think that's really a millionaire from the Millionaire Mind book, The Next Millionaire Next Door. That's what millionaires really had. So you don't really need a lot of credit cards. I know it's going to affect your credit at the beginning because that's history, etc. But look, I have a fantastic credit score, and I only have 2 credit cards. I think maybe 3, right? In fact, I think I had 3 and it's just back to 2. So you don't need a lot of cards, right? Store cards, all that stuff. Maybe you have 1 and then 1 for everything else, but I digress. So we want to create a plan to pay that off the right way. And there's right way to do that. I'll do another video on that. Or you can contact me. I can help you do that to get on the path. The other thing is to refinance. Well, if you have a car loan, we can refinance that car loan into a lower rate. If your credit is better, shop around. I mean, I wouldn't do it because I don't do car loans, but I can make recommendations and you can shop it around, go to credit union, etc. Create the path for that. And the other thing is refinancing revolving debt. And what that typically is called is doing balance transfers, if you can qualify for a lower card, or even contacting your current card provider and saying, hey, do I qualify for a low interest rate? Because I'm getting ready to do a balance transfer, or my credit score has improved since my last time, and see what you can do. So your payments go down, and then now that will lower your debt to income ratio. The last option, or another option, it's not the last, it can be the first one. It's not numbered or anything, but you can lower the price of the home you're going to purchase, so your target range. So maybe you were going to shoot for 500,000, but now maybe you're like, I'll just stick to 400,000. And then now up here, maybe you would qualify. All right, so that would go down. However, that may or may not be realistic depending on the target market where you want to purchase. the farm area, right, where you want to live. Maybe if you're willing to live further out, or if maybe you thought you needed a 4-bedroom home with a pool, you're like, I don't need a pool. Maybe that cuts off $25,000-$50,000. So those are options that you can consider, and then we can talk to a real estate agent to see what's the good fit there. All right, so now to the point. I know you're here and you probably saw it. Interest rates and APR, annual percentage. So FHA right now, interest rates way down. They are down. It's exciting. They're actually down around 6% right now for FHA. Conventional, we have 6.625%. VA, 6.375%, right? So interest rates have gone down, and who knows, maybe they'll be in the fives over the next coming months when the Fed actually lowers them. All right, so these are some of the assumptions for that. So other than that, guys, just leaving it there. I'm going to put the phone number, my email in the notes at the bottom of the video. Reach out to me, give me a call, visit our website, coastaloans.com. Would love to help you out. Get your home, become a homeowner, or buy an investment property if that's your goal. Reach out to me, residential and commercial loans. Until then, take care. Bye-bye.